Good afternoon, everybody. Today is April 16th, 2023. And today I'm going to walk through my 2023 crypto bull run thesis. So basically why I believe Bitcoin and the rest of the crypto market is going to explode in the next 2 years. So what I'm going to talk about a little bit is fundamental analysis, so the macroeconomic environment, technical analysis, looking at the price chart, on-chain analysis, which is looking at the blockchain and seeing what type of metrics might contribute to price, sentiment analysis, which is basically seeing how the public perceives crypto or anything of that nature. So finally, I'll give my actual price prediction for where I think Bitcoin can reach by the end of 2025. So a little disclaimer, this is all for educational purposes only, informational purposes only. This is not meant to be any type of financial recommendation or advice. So be aware, cryptocurrency definitely has risks associated with it. You don't want to play with money that you don't have. It's highly volatile. It can be unpredictable. But again, this is basically to inform you of what could be an opportunity in the future. So a little bit about myself. My undergraduate degree is in chemical engineering from Mizzou, University of Missouri. I'm a licensed professional engineer in the state of Texas, so I've worked in paper and pulp, petrochemicals, those different industries for the past 6 years or so. I've been trading since 2019, so the legacy markets, you're looking at Fiat, so the US dollar, Japanese yen, British pound, the euro, all those types of things for about 4 years. And then within the last 2 years, I've also moved over to cryptocurrency as well. So just learning more and more every day about what drives that market and some of the advancements that we might see in the future. So what's my overall thesis? So basically, I believe that Bitcoin's price is going to go parabolic leading up to the fourth Bitcoin halving. It's going to be driven by a combination of factors, including increased economic uncertainty. So we see all this stuff with the banks, the dollar situation, inflation, all that type of stuff. Institutional adoption. So a lot of the big boys are starting to understand now that you can either get with the wave or you can get left behind. So a lot of these big institutions are adopting crypto more and more every day. Limited supply, because again, as more people start to buy up crypto, it just, again, inadvertently leads to limited supply of it on the open market, which increases price. So all of this is going to lead to a surge in demand for crypto, and we are going to see some pretty amazing things in the next 2 years, I believe. All right, so the first section that we're going to talk about is fundamental analysis. So basically looking at the macroeconomic global landscape, setting the stage for what could be a massive bull run. So let's take a look. So the current banking situation, I'm pretty sure we're all aware at this point. This is a chart of different bank failures over time. So this era was 2001, dot-com bubble era, Y2K, all that good stuff. And then you had 2008, the housing bubble. That ended up popping, massive run of banks just, failing and whatnot. And that kind of tapered off throughout the years. And then finally you had Silicon Valley Bank and Signature Bank, Credit Suisse, all these major banks that just ended up failing what seemed like out of nowhere in March, but there was a reason behind it. So basically in words, like, how do we get here, right? So some of these banks really became insolvent because over the past several years, they started buying government bonds, when they were really valuable, interest rates were low. A lot of banks bought like 10-year bonds. They might have yielded like 1.5%, maybe 2%, which was good for their risk metrics and what might be. Like, bonds are generally considered risk off. The problem is in 2022, the Fed started raising interest rates at the fastest rate that they've done it in history. So if you look at a chart of different interest rates over time, you'll see that this is pretty much vertical. It's kind of unheard of. So in general, kind of like what I was saying earlier, bonds and interest rates have an inverse relationship. So when interest rates are low, bond prices are generally high. So again, for the past decade or so, we've pretty much been at 0% interest rate. So bond prices were much higher, right? So if we start going the opposite direction, then that means that bond prices are gonna drop because there's less demand for them at that point, and you can find better yielding assets elsewhere. So when demand falls, price falls, and that's coupled with the fact that this is the big one, honestly. This is huge. So March 2020, the Federal Reserve changed the rules about fractional reserve banking, and they decreased the minimum reserve deposits from 10% to 0. So basically, in the past, you had to keep 10% of your depositors' money in the bank. They changed it to where you only have to keep 0%, which effectively means they can loan out everything and not keep any deposits. So that's fine as long as the investments that they have are, yielding and they're giving a return. They have, sufficient cash flow and whatnot. But what happens when those investments start to go south? Then they put themselves in a lot of risk because they've used a lot of leverage, all leverage, 100% leverage. So it can turn pretty quickly. So yeah, this is just a chart of the interest rates over time. Like I was saying, in the past they used to be like double digits. The federal funds rate, this was, they're definitely way up here, almost 20% in like the 80s. So I mean, times have definitely changed, and you see they've come down over time. And then we had like this decade of pretty much free money at 0% interest, and then we just saw these increases recently where it's vertical, like literally just going straight up. So you have this. I mean, this at least had a slope. That had a slope. That had a slope. This is pretty much vertical. So, and speaking of the rule change that I was talking about earlier, so you have, again, this is from the Board of Governors of the Federal Reserve. So, top brass. They announced that, let me see, what was that, March 15, 2020, the board reduced reserve requirement ratios to 0% effective March 26, 2020. So a couple days later. This action eliminated the reserve requirements for all depository institutions, including banks. Crazy. Insanity. Okay, so that is coupled with the fact that, fiat currency has been on the decline for a long time. We are not on the gold standard anymore as we used to be. So our money is government issued, and it's not necessarily tied to any type of commodity. You could argue oil, and actually I'm probably going to argue that in a second, but we look at the purchasing power of a dollar over time, and it's just gone absolutely to the toilet. Like the inflation is just eating away, and just the way that we've managed it over the years is just you really can't manage a fiat. That's the problem with it. It's impossible to manage. Like every fiat currency that's existed, and there have been hundreds and thousands, just on different countries and whatnot, but they generally last about 27 years on average. But you have to consider the fact that you have entities like Great Britain and the euro, the US dollar, the yen, and all these, like they've been around for hundreds of years. So they kind of skew that average. But most of them can fail in matters of weeks or months or short years, like 2 or 3 years or so. But, things like gold, we've had that around for thousands of years and it's never gone away, never is going to go away. But, just a little on fiat. And then so also you have the reserve currency. So this is it looks like roughly, if you look at the years, so 110 years, right? This is saying like 1920 to 2030. So really it's like 103 years. 103 years maybe. 105 years that Great Britain had it, 95 years for France. Was this the Netherlands maybe? Yeah, the Netherlands, they had it for 80 years. The Spanish had it for 110 years, and Portugal had the reserve currency for 80 years at that point. So if you really look at it, we're kind of living on borrowed time at this point. It's 110 years, and I'd say the average here is probably about 90. So it's like we're right at the point where most reserve currencies tend to switch. I don't know what it is, but it is very interesting to see like how that cycle is played out over and over for hundreds of years at this point. And then so you got the petrodollar too. Like this is something that most people, I would argue, probably don't really pay attention to, but it is important. So the petrodollar is basically, it's an agreement that they made in the 70s. It was like Nixon and the Saudis made an agreement that basically said that all Saudi Arabia's oil had to be purchased in dollars. So if that's the case, if Saudi is a huge oil exporter, Anyone who wanted to buy from them, and a lot of people want to buy from them, everyone wants to buy from them, they had to change their money into dollars, which increased the demand for the dollar, which gave it a lot of value. Um, so the U.S. would start lending out, money to these different national banks so they could buy oil and whatnot. And then other countries would go buy from Saudi Arabia. Saudi Arabia would buy sovereign wealth funds, U.S. treasuries, and all that stuff, which also drives up the price of the dollar. So it's a vicious cycle, but it has worked incredibly over the past, several decades to their credit. But yeah, the problem is you got people who don't necessarily like the fact that U.S. has the dominant hand here in the currency. So some people may have heard of BRICS. So that's Brazil, Russia, India, China, and South Africa. They are forming somewhat of an economic alliance that basically it seems like their goal is to get rid of U.S. Dollar dependency, at least in their countries, not globally, but in their countries for sure. But it could lead to some problems for sure if they began to start recruiting other countries in their geographical areas or expanding even more so. So we look at this chart. Barrels per day, the United States is the biggest biggest producer of oil in the world, crude oil. They've passed Saudi Arabia and Russia really in the past maybe decade or so. And then you have Canada, Iraq, China, blah, 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 and then it just goes all the way down here. But if you look at these countries, a lot of them are big oil producing countries. So you have Brazil right here. You have Russia, number 2. You have India is down here, like number probably 20 something. China is up here. South Africa is not going to be on the map, but still they're in Africa, which is similar strategic to this too. So, but you look at the rest of these countries, they're all pretty much in the Middle East, Kazakhstan, Iran, Qatar, or West Africa. So Nigeria, Libya, and this is like more Middle East. Yeah, you got Algeria, Venezuela, South America, you got the UK, so on and so forth. But just geographically, they have a lot of reach. So it's going to be interesting to see how this unfolds. Like, it's nothing that would affect us overnight, but it could be a slow, gradual claw at what's going on with the dollar. So, and then finally, you got inflation, right? So inflation, the way I see it in simple terms, is you have more dollars fighting for the same amount of goods and services. So if we print more money and we have roughly the same amount of goods and services that we did without any extra, production or productivity, then the prices end up going up because you just have more money fighting for the same amount of stuff. I say like in 2020, that's pretty evident there. So like a large part of the economy got damaged with all the different regulations that were put out. While at the same time, you had $3 to $4 trillion that were printed out of thin air. So you look at it right here. This is the federal balance sheet. This is 2020 right here. COVID happens, boom. And then just out of nowhere, we get like $3 trillion injected into the economy. And ideally, you have a money supply that gets increased with productivity and population, like I was talking about. But that really hasn't been the case since 2008 when we started this whole quantitative easing thing, which is basically just legal counterfeiting, but that's a story for another day. Yeah, so you can kind of see right here. That's why people are like, why are prices increasing so much? Is because like we just have so much more money out there, and it's fighting for the same, if not less, amount of things. So definitely something to pay attention to. So overall, I mean, this just leads to the U.S. dollar being pretty weak, probably the weakest that I've seen it in some time. So people are looking for ways to find a safe haven for their money from inflation, from X, Y, and Z, from all manner of things that could happen. And Bitcoin has, in general, proven over and over that it is over time a good hedge for inflation. And all these other things that are occurring. And it's proven that it's scarce too. Like, what happens if you have infinite money? Then it's not valuable because it's not scarce. That's kind of what we're dealing with right now. With like these trillions of dollars that we have, it's just not scarce. So it's something to pay attention to. All right, so next we're going to look at technical analysis, which is my favorite because it's what I do every day. Basically, we'll be looking at Bitcoin's price action in the past and then what it looks like currently. So yeah, we'll have to switch over to Trading View. All right, so next we're going to look at technical analysis, which is my favorite part because it's what I do every day. Basically, taking a look at the price action historically and currently for Bitcoin and seeing what insights we can pull from it. So we'll hop over to Trading View and see what we can do. All right, so this is a monthly chart of Bitcoin with the moving averages on it. So this is your 50 moving average. This is your 100 moving average. There is a 200 moving average that's blue, but we haven't had 200 months in Bitcoin just yet. So, yeah, well, it'll show up on other charts. Basically, you can see each one of these candles is a month's worth of data. So you can go over here. It looks like nothing's happening, but a lot was actually happening. Ran up here, little bump that wasn't so little. Ended up running up in 2018, 2017, 2018. That's when most people kind of got on board and realized that this might be something. Had a bear market, came down, slight recovery right before leading into COVID, and then the huge rally in 2021. This is like AMC, GameStop, NFTs, like crypto's going crazy. This was this time frame. Then we did some type of accumulation phase and a little recovery, but ultimately we ended up coming back down in November of 2021, all the way until about November, December of this last year. But currently, it looks like we're respecting this 100 moving average that we have here and bouncing off of it to the upside. That, coupled with a couple other things, lead me to believe that we are at the start of a bull market for sure. So that's one way you can look at this chart. Another way that you can look at the chart is on a logarithmic scale. So the other scale was linear, and that was the price action. This is the exact same chart, but just with a different scale. So it's logarithmic. So Bitcoin it doesn't use anything exponential, but it moves exponentially over time as we've seen like these big swoops up. So that makes it a little bit easier to see. So if we look at this first move that Bitcoin had, like from pretty much the beginning, the first bull run in Bitcoin ran for 50,000%. So like a 500x at least on your money. It's crazy. This is still very much so when Bitcoin was magic internet money though. So no one could have predicted that, honestly. There was a lot of luck in that era, but same with this one. You had this is the second run up to 2018. That was a 9,000% increase from the bottoms here. So about a 90x on your money, almost 100x on your money if you hold for 2 years. So yeah, what is this? 28 bars. So each bar is a month. So about 2 years. You see that pattern here too. So that's about, if we look at how long this was, 24 bars, exactly 2 years. So 2 years, 2 years. We came back down to the moving average, had a little bounce off, COVID, and then we ran all the way up. Matter of fact, I actually consider the bottom of the bear market was here. And this wasn't its own bear market in my opinion. This is just part of the thing that COVID kind of took out and delayed a bit. So yeah, that was 1,600% from top to bottom, and it took 27 bars, 27 months. That's about 2 years too. So again, we come down here. Now we're at current day. Pretty much we're respecting this 100 moving average. And it looks like we may, continue on with this upward trend. We're starting to break structure. So it's looking good. Definitely brighter days ahead. If we go down to the weekly chart, and actually I'll take this off I'll put this back to regular. So yeah, it's just a linear scale again. So if we look at the weekly chart, it looks like the 200 moving average is showing up because we definitely had 200 weeks worth of Bitcoin at this point. If we take a look at where we're at, the thing that jumps out at me is that we've really started breaking structure. So we've had this huge move down, and if you watch it the entire way, we haven't had really a period where prices come and broken some type of structure. It's just been kind of continuing with this lower highs and lower lows pattern, and we haven't had any real breaks upwards. So now we finally have this last major push down. We finally get down here in November, and you see we broke here immediately, and then we broke this area, and now we are attempting to break 30,000. My thing is, I believe that the trip from 30,000 to 60,000 is going to be very swift, and I'm talking in a matter of weeks to months at max before things really start to kicking off. It's going to be a little bit quicker than what most people expect, but really that's not a crazy move if you look at it honestly. If we take a look at the Fibonacci numbers, right, we do a retracement and an extension. So we came all the way up here, and then we came down here, and then up above you have potential price targets based on where you could go. So to get 100% of that move, we would have to get up to about 80,000, then 66.55. Let me zoom in a little bit. 66,000, 55,000, 40-something thousand. These are all very realistic price targets because they're within that one. They're under this line, so it's like they're pretty realistic. And then you start getting up here where you have even more extensions of 1.618 and the 2.618. At that point, these are a bit more extensions. So it's like, okay, well, we're breaking beyond what we did in the past. So like these are the kind of upward ranges, right? But in the short term, I think it's 60,000 is a good target. It can get there pretty easily. So I'm going to document. It's my plan to document the whole path from where we're at today to 100,000 and then beyond too. So I think it's going to be pretty fun moving forward. I'm excited about it. So that's pretty much it for technical analysis. Again, this is all indicators of showing that we're headed up. Even the fact that price is now above above all the moving averages, and looking that we're going to continue on upwards. So let's zoom in here a little bit on that. Especially once this 50 moving average comes back above the 100 moving average, you'll have a golden cross, which is a huge type of bullish sign, huge bullish signal that we're going to continue upwards. So that should come up pretty soon here, and especially on a weekly chart too. Like that's significant. The higher the time frame, the more significant each individual move is. So definitely in the short term, in the next couple months, I am projecting 60,000, but we will see how that plays out. And it's not going to go directly up to 6,000. There's going to be some pullbacks. So if we take a look here, just based on this chart, I'm looking at price probably pulling back between somewhere in this area, about 40,000 to 37,000. So it may come up here and then shoot back down to 24, do some yo-yoing. This might be the start of a demand zone right here too. Not entirely sure, but it could come back down to 30,000. We'll see. Yeah, so I mean, it's got two options right now. It can either continue upwards or it can come back down to 21,000, so on and so forth. But the general trend still is upwards. So again, things to note moving forward. All right, we'll switch over to presentation. All right, next we're going to look at the on-chain analysis, which is basically taking a look at Bitcoin's blockchain and seeing what different metrics might contribute to price. So we've mentioned Bitcoin halvings, but we'll kind of talk about it now. So Bitcoin halvings happen once every 4 years. So the original Bitcoin block was Genesis block, they call it, was, let me see, January 1st, 2009. So 4 years later, roughly, 11/28/2012, you had the first halving. So at every halving, the amount of Bitcoins per block is decreased, right? So you went from 50 to 25 to 12.5 to 6.5. And what that leads to is this. So it's like the majority of the Bitcoins were produced in the first 4 years. And then after that, it only produced half as much and half as much and half as much. So over time, you're going to get to where there's less and less Bitcoin, and you have some type of curve that looks like this, to where it tapers off almost asymptotically to the horizontal side. So one thing you can kind of look at here is basically with every halving, you have seen a major increase in price. So it's like you had the original run up, and then you had, once they started tracking Bitcoin's price around here, but you had a run up here after the halving. Then you had a period of chilling out, and then you had a slight run up, and then a major run up all the way up to the halving. And then now we're at current day, to where we're about to hit a halving here. I think we're going to do one of these and kind of pull up right before running all the way up to somewhere in this neighborhood, but we'll see. One thing you can look at is it's a website called lookintatbitcoin.com. You can kind of see it in the watermark back here. It has a lot of different charts and graphs on Bitcoin that can help you to get a better understanding of price and how it's moving and reasons why price might be moving in a certain direction. So one of the ones that you can look at for on-chain metrics is market value to realized value. So basically, this is a measure of how expensive or cheap a Bitcoin is. So the black line up here is the market value. So all the Bitcoins out there in circulation times the current price of Bitcoin. So that's the realized market value. And then you have the realized market value is the blue line. So that is it's all the Bitcoins that are out there multiplied by the price that they were moved at last. So if you have people who have been holding on, this line is generally going to lag the black one. And when you see a period where the black one crosses over, that's a great time to buy, because that means Bitcoin is undervalued in general, right? So as you'll see, that this kind of lines up here to where they've anytime it enters this green zone, it lines up with this. That's a good time to buy. So over the past, really since November of last year, has been a fantastic time to buy Bitcoin. Still is too. So we're pretty low here, so you got time, but not too much time. So I would go ahead and hurry up if you make that decision. Do your own research. You see in 2020 it came down and hit this line after going under the line. At the end of 2019, after that major crash that we had and started the recovery phase, it did something similar there to where it went under here. Good time to buy, ran up, so on and so forth. So just something to look at there. Another one you can look at is the Puell multiple. So basically, this is looking at the daily coin issuance, and it's dividing it by its yearly moving average, pretty much. And you get some type of ratio. So what the daily coin issuance is like Bitcoin miners, they produce X amount of coins per day consistently. So on average, they're going to produce about that many coins per day, whether it be, 100 or 1,000 coins per day that are produced off the blockchain. From that point, you multiply by the current price, and then that's the daily issuance in US dollars. And then you just divide that data by its 365-day moving average, and you get a multiple, right? So same scenario here. Anytime it comes down into the green and that multiple is on the low side, then it's a good time to buy. Right now, we've been in that multiple for probably about the past, since November. Somewhere in that time frame, and then now we're kind of moving towards the upside too. So something to look at. These are 1 year HODL waves. That's not, yeah, it's basically just a term for how long has one wallet held Bitcoin. So 60% of all wallets have held Bitcoin, that hold Bitcoin have held that Bitcoin for at least a year, according to this chart. So was it 62%, maybe closer to 70, something like that. And then it's the same chart, but it's looking at a 5-year span. So in 5 years, it looks like 28% of all wallets that are holding Bitcoin have been holding Bitcoin for about 5 years or so. And then 10, you would expect it to decrease as well. So you have 14% of all the wallets have been holding for 10 years. But the one thing you can see from these trends is hey, they're on the rise. Like, people are holding on to Bitcoin, and the more people hold on to it, the more expensive it's going to get, because again, that just leads to less supply on the open market. So that is going to lead to price increasing. So some of the different on-chain metrics that you can look at, there's a lot more for sure, but for the sake of time, we're not going to go through the entire website. So All right, moving on, we're going to talk about sentiment analysis. So basically the way that the public looks at crypto. And one of the best ones that I've figured out how to look at this is the crypto fear and greed index. Um, so basically this is looking at Bitcoin price over time and basically a series of different indicators that they put into one index, which is, I mean, it looks at search trends, it looks at what's going on Twitter, it looks at the price itself, it looks at how many people are holding Bitcoin at any one particular time, are people moving it actively, X, Y, and Z. So if you look at the price, and this one only goes back to 2019, there are others that go back way farther, but I like the way that this one's colored. You see this drop into fear in like 2019 leading into 2020. Nobody's really buying at that point, and then like you start seeing like this breakout of yellow and green and so on and so forth, and you have a run up in price, and then people get really hyped up around like this green area, which is signifying for greed, right? And then the red is fear. So you come down again, then everything falls down. 2020, everyone's in this fear period, and then you start coming out, things start getting all right, and then you start having this light green. And then, chill out for a little bit, and then you start really taking off into 2021, so on and so forth. And then, like, we went through some cycles here, and then ever since about November of 2022, we've been, like, kind of on this little fear slope pretty much. But the beautiful thing is now you're starting to see this breakout of yellow, this breakout of green. And if you notice, with every time it happens somewhere around here, like, you'll have a period of yellow followed by a little hint of green, and then it just runs up to the next level. Does it here too? Like this little hints of yellow, and then it gets greener and greener, and then it just shoots off parabolically. And I think you're going to see that same thing here. Is like within the next couple weeks to months, you're going to see just a shoot off in price pretty much. But yeah, I think that's a really good index to look at and keep track of on a daily basis, just to see when you should be buying and when you should be selling. So like, I mean, if you're considering it, the best times to buy price wise are going to be in your red periods again, because those are down. If you start seeing that this is like up in the green area and you're holding on to something, I would consider taking profit around that time. That's going to be your best bet. If you don't want to closely monitor price, but yeah. Another thing you can look at is Google search trends over time. So, I mean, I looked for crypto, Bitcoin, Ethereum. You can see it kind of correspond with different time frames, like 2020, the run up into 2021, so on and so forth. You can do the same thing with like NFTs or whatever you want to do. But like this search trend, like we see the similar run ups, the expected run ups in 2021, and then just a gradual tapering off. People probably in this time frame were talking about like, oh, Bitcoin's dead, because it really was sinking like a rock. Crypto's dead, blah, 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 but crypto has proven a history of being very resilient. Bitcoin has at least. But now you see we've just kind of returned and nobody really talking about it, which is a prime opportunity for anyone who wants to get in. This is the time now. Like, you don't want to wait until it gets all the way up here, because now there's a fever pitch and everyone's buying, prices are at all-time highs, and really you can only get so high before you have to start back coming down again. There are no more buyers and everyone has to get out. So, the best time to do it is when you're in a period like this and no one's talking about it, or when you return to normalcy down here and no one's really talking about it anymore. So another thing to look at. Okay, so we've gotten to the end, and basically this is my 2025 Bitcoin price prediction. So based on everything that we talked about before, I'm looking at the factors, and this is where I think price could go. 250,000 before the end of 2025. That might sound like a big number, but I don't think it's unrealistic. If we look at the charts that I'm going to show you in a second, it kind of helps to show you a little bit better than I can tell you. So this is a chart of Bitcoin's price over time. It's logarithmic, but it shows where the halving's happening. So we talked about the halving already. You have 1, 2, 3, and then you're about to have the fourth one here. We take a look at it. After each halving, you have a run up in price, like every single time so far. And I'm not, I don't believe that that's going to stop on this one, right? Unless something drastic happens, but we'll see. First halving, we ran up 9,000%. So it's like a 93x. And then you had a 2,700% increase, which is a 27x, and then a 600, basically a 600% increase. So 6x, and so on and so forth. So at this point, we've had our downtrend. It looks like we're breaking back up, but we've already talked about in the technical section why it shows strength on the upside. What you'll notice is after coming up to every halving, you will have like this little run up here, and then a run up probably here too. So let's just assume that we run up to maybe, I don't know, like right here. So 89,000 to about 100,000, somewhere in this range. One more thing you'll notice is every time the explosiveness gets a little smaller every single time. So I divide this out, and each time it looks like it decreases by about 4x, right? So if you divide this roughly 600% by 4, you get about 150% increase right here. So if we go from $100,000 to a 150% increase, that puts you right at $250,000 for Bitcoin, somewhere before the end of 2024. I very much so think it's possible, but we're going to look at another chart just to, kind of help to bring it home. So this is like using Fibonacci numbers. So this is also a Bitcoin chart. Same logarithmic, so we can kind of see it in this way. We're going to do a Fibonacci extension. So basically, this is a tool that measures the upside and then the downswing and then the upside again. So we'll look at it like this. So we saw this entire upside. We've come down to this low right here, and then we'll drag this out to see where it hits. So somewhere in there. Yeah, there we go. So we see on this first bull run, price came down for the low and then swung high again, and then we smacked this 2.618 value for the Fibonacci, and then just blew through it. And then we did it again. So like we had this run up right here. You pull that up, and then you pull it down to the swing low. At this point, you see that over time, once we hit that low, we ran up into 2021 and smacked that 2.618 again. I think that's going to happen a third time. So again, we've had this run up from the bull market here, and then we've had a bear market that we are coming out of. I believe we are. And then you have this run up to 2.618 again, which these are Fibonacci numbers. That puts you at about $188,000, $190, so on and so forth. So not terribly far from $200,000. So like $200,000 would be right here, this green line right here. So, I mean, you can see we're not that far from that number. So if it goes anywhere past that, we're pretty much going to hit $250,000. Yeah, so I mean, that's kind of where I'm at with Bitcoin. I know 250,000 sounds like a big number per Bitcoin, but at the same time, I don't think it's unrealistic. $1 million Bitcoin in the next 5 to 10 years is not unrealistic in my mind. But yeah, that's really all I got. I appreciate y'all listening through this. I know this might have been a little bit drawn out, but any further communications will not be this long for sure. It's just going to be charts and graphs and messaging. So if you have any questions, by all means, hit me up. Chris the Human on Instagram and Chris Talks Crypto at protonmail.com. Definitely enjoy talking, and any feedback is welcome. So appreciate it.